Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, December 8th, 2017. Quite a bit to cover today. Again, elite membership is forming, so do sign up for a discounted membership. Throughout this presentation, I will be using more and more of the TradingView interface. I've been moving more and more away from StockCharts.com interface. So if you need to find me, you can always find me here at TradingView, and I answer my private messages really quickly. My user ID, you can just find me by clicking here at the upper hand corner of people and go add master charts, and there I am. You can just send me a private message. Because if you want to get the scripts, the indicators that I published, and I will be using them throughout this video, and those are very useful scripts. I have to add you manually to those scripts. So if you do want to use them and follow along, it will be quite easy for you, and you get it for free for first month if you join now. So anyways, again, a lot to cover here. I'll try to touch upon greed versus fear, greed and fear versus gratitude and charity. We'll try to look at those two trades that I just did recently. One is for GILD, the other one is for Costco. Junk bonds, dollar, gold, oil, and natural gas are also on the agenda. So let's move along. Right, so if you have any questions or if I'm moving too fast, send me a private message right here at TradingView, or just send me an email, whatever. These are custom scripts that I created. They help me find support and resistance, and I'm basically trading, using these indicators. They're very easy to use. So the way I use it is, if the security, in this case, is S&P 500, and if it's been going up, it's been trading above this green line, I simply go and look for a buying opportunity at this green line. So for example, right there would have been a good entry on, let me see when this was. This was on 8/21 of this year. And you can use pretty much any security. So this is S&P 500. To me, this is a clear uptrend. So if or when we come down, I think it will be a buying opportunity. Where would I say that it is no longer a buying opportunity? I would get really cautious if I see a close below this red line, which is currently at 239 for S&P 500 SPY. I will get very, very worried if we get to 230 here. So there's plenty of room to fluctuate before a true bear market can even be contemplated. So in general, again, for example, here is my position in Dow Jones. I entered actually a while back and noticed that it has not even come down to this green line at all. And once again, you can get these indicators at MasterCharts Trading. Here's QQQ. This one is a little more volatile. I am not, making these lines up. They are programmed in. So, for example, for QQQ, this would have been a great buying opportunity here in June of this year, and it would have made a nice profit. Recently, there was a good opportunity for IWM. Not sure what that is. Let me try and get rid of it. So IWM recently was a good buying opportunity here. Actually sent an alert to my subscribers, and I would have traded it by just buying it around here, IWM at around 145 or so, and I would have put a stop relatively wide down below. So for this way to trade, I think you need a little bit wider stops. So it's just my way of trading. Some of the stocks have been on my radar here. For example, XRT, the retail ETF. So also I can use these indicators to find good breakouts. So for example, here I published recently, this is actually a published idea that was published, believe, let me see, where was it? It was published right where this line is, so on the 30th of this of last month. And you can see that we pierced through this blue line here. Let me pull it up on a different chart. It'll be easier to see. So for example, here's XRT on this chart here. And you can see a clear breakout above the blue line. So now I consider XRT to be in a bull market. Before here, I would consider XRT to be in a bear market, and I simply avoided it. Now, some people like to short equity, and you can use these indicators to short. So you can short at the yellow, or in this case, at the red line. Notice that here we saw a breakout above the red line, and we continued on to the yellow line, to the blue line, and now we have a breakout. So this is a good sign for for XRT. Another recently published chart, uranium. Again, I'm waiting for a breakout above this blue line, so let me show it to you on this chart here. And here's uranium ETF. It's mostly CCJ anyways, but a breakout above this line here would be like 16.5, $16.50, and I think if we break above it, there will be a higher probability of this particular instrument going higher from here. All right, let me see what else we got here. Longer term, this is weekly time frame for S&P 500. Longer term, there's really no question about this uptrend. Ever since 2016, like March of 2016, there was right there is a breakout, March 2016, and breakout above this blue line. By the way, this is a weekly chart, and notice that I changed the setting to 52. So this is a weekly chart. So these lines are drawn using the look back period of 52. Notice that we found good support at the blue line and lots of opportunities to buy at the green line. So right now we are kind of sort of overbought, but at the same time it's a very bullish chart. Here's another shown IWM again. This one I excuse me, I actually sent to my subscribers, I believe. Here's a recent one, and this is Biotech XBI. This is a bullish chart. Notice that stock is trading higher and higher above this green line. Then we see a pullback. So the one of opportunities is to be buying at the green line. The other opportunity would be buying between the green and the blue line, or at the blue line. I mean, at the blue line is really good opportunity sometimes, but they sometimes don't get there. But recently I sent an alert to my subscribers. We immediately got our target. Notice that I personally prefer wider stop, and again, by extension, that means smaller positions. Your mileage will absolutely vary. But with this system, you get a significantly higher success rate. So even though the target was relatively tight, you get plenty of successful transactions to compensate for the occasional loss. Energy, very interesting looking chart. This is a hammer candlestick. It's like a big hammer candlestick. So this is showing support around 67, 68. I don't see a bullish breakout yet. I still want to see a breakout close above 72.12. When I see this breakout, I will say unequivocally that we're in a bull market for XLE. But it is looking better and better. For example, here you can see there was an attempt at a breakout, but the bears did not come in really. There was very little selling afterwards. And then we saw another breakout. The bears did come in here, so that's not a very good sign. And another attempt and another bearish, push. But I like this hammer. This is looking more and more like it's, XLE is changing into an uptrend. Here's XES, and this one is significantly weaker than XLE. Notice it's been kind of tapping out between the yellow and the red line and still in a downtrend. I would probably not short it. I don't like to short equity in general, especially during bull markets. Notice especially that now this blue line is closer, so there is less work for this security to, you know, to get to that 1970 mark, 1977 mark here. SMH, another recent opportunity, I think. Notice that how it bottoms out around the green line here, very easy entry. So you enter around the green, you put your stop around the red, you ride the trend up. Same thing here. Right now I don't see any big reversals. Yeah, it's a big, you know, volume here, but I still think that we're in an uptrend. I don't think we have changed, reverse trend really. Here's one that I think I sent out actually several not alerts, but several ideas where those red triangles are. And here's pretty clear. This is IYZ, the telecommunications ETF. Here's a bearish break, and if you're hell-bent on shorting equity, you can short it at the red line or at the yellow line here. And notice that basically all of this trades would have worked out in your favor if you were willing to wait a little bit and to put your stop maybe above this blue line basically. So pretty useful to find good support and resistance lines. Here's another one, IYT, again uptrend in security, good opportunities anywhere below the green line, opportunity, another opportunity. Put your stop below the red line, ride this trend up. You can use any security. Here's another one that I just published, emerging markets a long idea. So it's technically currently oversold. So first of all, I want to show you that going back a while, you notice that lots of good entry opportunities, and here once again you have to put your stop at the red line. Don't put your stop really tightly. If you put your stop very tightly, then you'll get stopped out really quickly. But I prefer, again, smaller positions with wider stops. But my success rate in this particular chart would have been 100%, because 100% of these transactions would have worked in my favor if I was willing to wait and put my stop a little bit wider. I was asked by one of the subscribers, or rather one of the YouTube subscribers, to cover Russia. So again, if you have any suggestions or ideas of what you want me to cover, just put it in a public comment, like for example on YouTube or on Twitter, wherever, because I publish pretty much everywhere. So Russia here, okay, we can say that there was a bearish break here in June of this year. Once again, equity has equity or stocks in general have bullish bias, so maybe this was not even a bearish break, maybe this was an opportunity to go long. So in general, I tend to look at stocks as more, having bullish bias. So I really need to see like a strong selling, maybe even below this yellow line, before I say, okay, yeah, this is definitely in a bear market. If you're more twitchy, then you can put it somewhere else. But to me, here is the breakout in August of this year. So yes, breakout bullish, surge, opportunities to buy at the green line. So you would have already a successful trade, another successful trade, and for example now you could be entering already for a potential push higher. Notice where I would have put my stop relatively wide, so you will need to have a relatively small position. China, same thing, still uptrend. Yeah, we dropped below the green line. There's a gap here, which is pretty much normal. It gaps all the time, but good buying opportunities. Actually, I think now is a good buying opportunity. If anything, we're below the green line, so we're technically oversold. And finally, here's my position 10, and here's my rationale for opening this one. So first of all, breakout above the blue line here in July. no thinking is involved. It's already drawn for you. So the line is there. If there's a close above it, that's it. There is a breakout. Then we look for buying opportunities. Some people, actually, of late, I've been kind of liking to just see this breakout and just buy it there. It just sometimes goes. But you can also get it on pullbacks. So tons of buying opportunity here on pullbacks. Another surge, another buying opportunity. And I actually myself entered right there in September, and it's really nice move here. I also have First Solar. I'll show you my position later. So I went ahead and I sold half, so I'm at no loss obviously, and I think I'm still trailing like at this level here at the blue line, but I think I'll start advancing it sometime in the future. Right, and now let's examine a couple of recent trades that I did. So first of all, here's Costco. Costco kind of been chopping around a lot. So here I was not really looking at it. It was below this red line. Notice how it came up to the red line, got to the blue line here, and got shorted really strongly. But the new low was not made. So here's the previous low, a fresh low. After this earnings gap, the fresh low was not made, and we kind of moved higher from here, and finally right there the breakout occurred. Let me mark it on the chart for you so that it's pretty obvious. There's the breakout. So once the breakout has occurred, we now can contemplate long positions. So I started to contemplate long position in Costco around here. Probably should have just immediately bought it down there. I bought it at around 171 or so, and then like literally 3 days later it just popped on me. So I already sold half here, and I am trailing the rest basically. So this is a good example of a successful trade, and I am, this is how I usually, off late, that's how I've been trading. I see a breakout, I just buy the breakout, and usually, not always, results in my favor. So, again, no system is perfect, and I wanted to show you another trade that I just closed, but at a loss. So, here is the same thing. This is Gilead Sciences. Here is the breakout that I was waiting for, basically. Then afterwards, afterwards, I probably should have just immediately bought it. If I bought it like at the breakout and put my stop at the red line here below, then I would have immediately made money because it popped in my favor. I was like, I don't know, maybe I wait a little more. So it popped, up here, and I'm like, okay, I'll go enter on a pullback. So I went ahead and I entered exactly at this green line here. Notice that it went, and I put my stop at the red line. Now this is equity, and I probably should have put my stop even further here at the yellow line. I calculated my position and I saw how many shares I could buy. This is, I calculated to be stopped out at the red line here. So I did that. I was forced to close my position here. Notice that it's kind of still bottoming, and actually now doesn't look too bad. So let's maybe wait until another breakout, and we will reattempt again at around 77.80. So the way to look at it is, I've been trying to look at it instead of, oh, I'm fearful for my losses. I say, okay, I'm charitable for this loss. Just a different way of thinking. And also, I am greedy for my wins, and I say, okay, I have a good win. I already sold half. I'm grateful. I'm grateful for what I already have, and if I get more, I'll be grateful for that as well. So do you see how it's different? So we got greed is pushing the prices higher. Fear would be like pushing the prices lower, for example. So on this in this dichotomy, we can say that if we are winning, great, we are grateful for our winnings. If we're losing, we kind of consider it a charity, like an educational charity. All right, let's continue to bonds. Here are junk bonds on a daily time frame, and here we have sort of indecisive action. Uh, we're coming down from fresh highs towards the below this blue line and towards this red line. Now, so far we didn't see a close below the red line, but there's a possibility that we could. The reason why I'm so concerned about this is because of this chart. So here is junk bonds on this is a weekly time frame. I actually removed the price. Let me put it back for you so that you know what I'm talking about. It's just kind of hard to visualize. So here is the same chart without the price, and it's easier to visualize. So here we have several time periods that are marked on the chart as a trading ranges. So for example, this trading range is basically between the yellow and the green lines, and it's showing that the trading range has narrowed, and now a breakout one way or the other could unfold. So here's, for example, and this chart, these funds, the HYG and JNK, they don't go back that far. They have been already only around for since like 2008, I think. So there's not that much data, but just judging from this 1, 2, 3, 4, 5 events. So we see that actually the trading range currently between this yellow and the green line, and I'll zoom in a few minutes, is really narrow. It's only 2.5% versus the previous one here back in 2014 was 3%. And notice the resolution was to the downside in 2014 here. So where is this living? Where does this leave us now? We could, kind of fast forward through junk bonds and see. Here's the junk bonds JNK. Let me zoom in on the current price action, and this is a weekly chart of junk bonds JNK. So I'm zooming in here on the weekly time frame. Notice that you see how wide the distances between the green and the yellow line and how narrow it is now. So looks like we have a narrow trading range, and now this trading range is well, we don't know which way it's going to go. Basically, it could go it could break down, or it could continue higher. Now currently we still have a bullish bias because these are fresh highs and we have not yet close below this red line, but notice how close this red line is now to the to the price action. So if we see a close below the red line, there could be more of a bearish bias towards this chart. Will this mean anything? Is difficult to say. Generally speaking, for example, here's a previous narrow trading range, and notice how the price came down in let me see, 2010, how the price came down towards the red line, but there was actually no close below the red line. We continued higher. But here in 2011, notice the price came down to the red line, and then there was a bearish resolution afterwards. So it could go really either way. Here's a positive resolution or a negative resolution for this. So I'm basically waiting and watching which way this will resolve. Currently, you could potentially, if you're a sophisticated investor, you could play it via a options play. So you can do a breakout or a breakdown. I think it's called a long straddle, if I'm not mistaken. I honestly don't play options, so I don't know. All right, so junk bonds. Really briefly, let me cover TLT. TLT 20+ year Treasury bond fund. Could this be a breakout? It's possible right there. On the 3rd of November, looks like we have a breakout, and then we kind of meander in between this green and blue lines. I actually myself entered here on the long side. I bought it, and it went in my favor, and then I got stopped out, basically, because it went to my first target. I got stopped out. CTLT entry right there. Where is this going? This sure looks like a bullish breakout, so we could continue higher from here. If bonds continue higher, it will pull money away from stocks, and that could mean maybe we'll see a correction in stocks finally of some sort. Right, let's move on to the Forex universe. Here is DXY, dollar index, currency index on a daily time frame with my indicators. On this chart, you can get these indicators at MasterChartsTrading.com. Just send me an email. You can also get these indicators by going to TradingView.com and looking for me. And I'll show you how to look for me. It's really easy. You go to TradingView Home and see how it says here ticker. Change that to people. You go at Master Charts, and there I am with a my logo there. Anyways, DXY dollar index downtrend in security. I think this cannot be traded per se on American exchange because this is a CFD, contract for difference, but outside of the United States it can be traded. So here is a breakdown back in what is this, May of this year for the dollar index. We can put a note there, and we're going to say that this is a breakdown, and now we're going to treat the security as bearish, so we can short at the yellow line or at the red line. So for example, I'm going to mark good opportunities to short. So for example, we have set a bearish bias, we can short immediately, but here's a wonderful opportunity exactly at the red line. Another opportunity, we could say that this is a breakdown. Maybe we could short like maybe like right there also. Another opportunity to short was back in September of this year, and this was depending of where your stop is. Now I prefer again wider stops, and for Forex instruments this can be traded for example on 1 minute chart. It makes no difference. So I'm gonna for example change DXY to 1 minute chart. You can same thing. For example, you can short it here at the yellow line, short again at the yellow or the red line. But for the purposes of this particular presentation, we're going to say that this is a bearish security. So we will be shorting this security. We will ignore oversold conditions. We will only look for overbought conditions. So overbought condition right there in November of this year. I think we're already overbought currently, and if I was able to trade this instrument in the United States, I would be shorting it. But where would you put your stop? I would put my stop well above the current price at 99, because that's the line in the sand for me to consider myself wrong. You would say, but this is too wide of a stop. That just depends on where you want to, but with this technique you will have a very successful high success rate basically, even though you'll have to use smaller positions. So here's Euro USD on a weekly time frame, and you can change the channels to weekly and make it 52 weeks channel. So you create a price channel with this indicator. Here's the breakout back in May of this year, and it just continued higher immediately. So even if you bought exactly at the breakout, you would have made nice money right there. Now we're looking for a pullback and a surge. So already one pullback, surge, one pullback, and then a surge occurred. So depending again where you would set your stop, or rather where you would set your target, this potentially could have been already a profitable trade. Now we're again currently below this green line, so again, if I was trading euro or currency, I don't normally trade them that much, but I would be buying it right now. Let's look briefly at British pound versus US dollar. Same thing. This is a weekly time frame. Here's the breakout for the British pound. Surge, pullback exactly to the blue line. Perfect opportunities right there. Let me show it to you on a daily time frame. GBP USD. There they are. There's the breakout. Opportunities to buy, and even this trade right here from June, July of this year, it would have been successful if you had your stop at the red line. So there's the successful trade. So lots of successful trades on this chart if you put your stop far enough. And here is another recent couple of recent ideas. Long opportunity. These are published publicly, so you can look those up. And finally, briefly, US dollar versus Japanese yen. I actually shorted myself yen twice. One was relatively successful, slightly successful. The other one was unsuccessful. To me, this looks like a breakdown right there. And this is a daily chart, so you know, there are sometimes trend changes and they do not follow through. Maybe this is one of those, because you can see that US dollar Japanese yen pushed lower, now a big rebound. So I wonder if we don't get shorted here, if we get up to this blue line, then maybe we'll need to reconsider the bearish bias on this instrument. And we can actually zoom in even further. Let's look on the 4-hour chart, and that's the reason why I was concerned and actually closed my position because of this breakout. Notice that on the 4-hour chart we see now a close above this blue line, and if we continue higher, then on a daily time frame, same thing will happen, and again at that point I'll have a bullish bias. I still have a bearish bias, and I would actually be shorting it. Maybe I'll try again next week, depending on the price action. Right, let's move on to the precious metals. First, let's look at gold. Here's gold continuous contract on a daily time frame. I thought that this was a bullish breakout. Now we're again corrected sideways, and I've actually broke the support here, which is not clearly visible on this chart, but let me show it to you on this. Well, let me actually show it to you on this chart. It's a little more clear with gold futures on it. So here is gold futures, GC1 exclamation point, and this is the support I'm referring to. This is that blue line at 1273. Notice we had a decisive break below this line. Also, at the same time, this is a relatively decisive break below the October lows as well. Where is this going? Now, the dollar has been acting somewhat bullish a little bit as of late. So, a few sessions, dollar has been pushing higher. By extension, gold has been pushing lower, which makes perfect sense because here's XAU USD. What does that mean? That means gold is at the top, US dollar is at the bottom. Currently, US dollar is winning this battle, basically, and gold is losing this battle. GDX maybe is saying something about the direction of gold. Relatively weak chart, so I thought we had a breakout here back in September, and notice that we just kept making lower lows and lower highs, and now we kind of broke below just recent support, below recent October lows. We're very close to this red line, and this is, to me, this is a line in the sand. If we close below it, I think I would just avoid it basically. But here's another chart I wanted to show you. So here's a bunch of my proprietary indicators. This is gold breadth index, so this looks additionally at the behavior of gold miners in addition to behavior of gold. Notice that it has weakened somewhat from 4 now back to 3. Is this something to worry about? Yeah. Reason being is there are several other indicators that have gone to 0, and this is not a good sign, but at the same time this is showing an oversold condition. So notice back here, for example, we had the oversold conditions, and every single occasion we got at least a small bounce, and depending on where you put your stop, we could get a significant bounce too. What I meant to say is, depending on where you put your stop, you could have had a win on every, all 3 of these previous trades. So this is a high probability time right now for GDX. Now, where would I put my stop? Maybe like below the July, is it June 710? July lows here, but maybe even further away, and I would put it on close below, so like maybe at around $20. So currently this looks like a make it or break it level basically, and if it goes any further, I think it will be in a bear market. GDX may be overreacting a little bit, because here's gold, for example. The bear market for GILD is at 115, and even then it's not 100%. See how here we had a close below this low and then we rallied. So actually for gold I would trust my own market breadth indicators for GDX more than I would trust the price action currently. We are oversold, and also we're still, well, at least somewhat bullish. So I think a bounce may be in the making currently. Alright, let's move on to the hard commodities and wrap up afterwards. Here's light crude oil futures on a daily time frame. So if you listen to my previous videos back here in September, October, I still thought that oil was bearish and actually shorted oil on this candle right there. I did not lose any money. I didn't make any money either. I made like 0.25%. And now I'm wondering why I even bothered shorting it here, because I should have been buying basically, because there's the breakout, maybe even, well, there's a breakout, but then we saw a close below the red line, so here definite breakout. And then we can just start buying, and notice that oil recently bottomed exactly around the green line, so you had actually 2 successful trades if you simply set a limit buy order at the green line. You can get those indicators at MasterCharts Trading. Look for me on TradingView and send me a private message, and I can get you those indicators. So in general, I think oil is in an uptrend. XLE for some reason is still falling behind a little bit, but I like this hammer candlestick, and hammers usually show good support, so it looks like there's support in this area here. Natural gas is a pretty choppy kind of commodity, and you gotta be super careful trading it. If you trade in futures, I think it'll be easier, because on retail level it's almost impossible, honestly, to trade it. So let's look at it from the futures point of view. Here's natural gas futures. There's the breakdown, potential bearish break. possible bearish break, definite bearish break. I mean, we got the close below the yellow line. So if you had a bearish bias, you had so many opportunities to short at this red line. Pretty much every single trade would have resulted in a profit if you put your stop above this blue line. And again, this would have been a small position, but you would have 100% success rate here. And this is, not always it happens, but overall my success rate is around 70%, and I'm pretty comfortable with it currently. Let me see if there's anything on the weekly. Yeah, that's it for this week's recap. Please navigate to MasterChartsTrading.com and then sign up at the Trade Alert Services right here. And if you click on Trade Alert Services, you'll have 3 opportunities to sign up for 4 weeks, 6 weeks, or 6 months or 12 months. Recently, I have added the indicators I'm referring to. So here's the indicators. You will get them with the subscription. And here are the scripts right there. I will have to manually let you use them. So again, once you sign up, send me your user ID and I will let you use them. That's it for this week's recap. Thanks for watching and have another great trading week. Bye bye.